Hello and welcome to another update video about ADA. So ADA continues to grind sideways. There isn't really anything that I could use to confirm that we've bottomed other than the reaction to the support region that we've seen, which was initially quite nice, but the market failed here to rally in 5 waves. So we have seen only a 3-wave corrective rally. These are typically not clearly bullish because they could just be part of a corrective rally, and if it's corrective, then it might either break down or just move sideways or form a larger corrective rally. So that means probabilities are always fairly unclear whenever we're dealing with these corrective sideways structures or generally corrections, right? And that doesn't give me the possibility to really clearly say that we've bottomed, even though it's possible. And that is obviously what these support regions are for. They cover sort of that uncertainty so that you can make your decisions, that you can, for example, look for positions in these zones. And sometimes it might be wise not to wait for the last low with buying. That is it. But again, it depends on your time frame. You could simply just use the boxes and look for entries there to trade that larger third wave to the upside, which should start from here or after one more low. Now, if we start from here, then this would be the orange scenario. And in the orange wave count, the only way to do this is to call this a diagonal pattern in a 1-2 setup, but it's not high probability and cannot be preferenced until we break at least above 52.5 cents. If we get there, then we want to see that the third wave reaches 60.5 cents, which is the 1.38 Fibonacci extension, and for me, the bare minimum of what a third wave rally should do. And then we should still get a fourth wave and a fifth wave, and the fifth wave should reach the 64.5 cent level. So these are sort of key parameters to look at. I mean, one of my jobs is to give you clear parameters, objective parameters, for a framework for trading. But obviously it's not a crystal ball, right? And the problem is that there is a limited edge on the micro level if the market is moving only in corrective structures. So probabilities are then fairly unclear. But for the orange scenario, I mean, there is a very clear invalidation point. That's the other thing. There is a key level against which you could focus on higher if you want to trade for the orange scenario itself. And that would just be the Wednesday low, okay? Because a break below that 42 cent level, which was is actually a bit lower than that, 41.8 cents. If we break below that level, well, that would be an invalidation for the orange scenario. And we would then most likely see a break of that scenario where we have to then, because this is the invalidation point. And that means in that case, we are likely then coming down in the white wave 5, in which the wave 4 either is still unfolding as a triangle, maybe it even topped here. That's again one more uncertain factor. Essentially, this is just a sideways range, and we are approaching here the next swing high, which is here at 48 cents. So pay attention to that. That's a small resistance level. Breaking above it would likely send the price above the trend line as well. If we get above the trend line, that's already a first step towards a more bullish interpretation. But in reality, it doesn't matter so much, at least not from an Elliott wave point of view, because here, to invalidate the triangle pattern in white, which would lead to another low, we need a break above that 52.5 cent level. And if we break above that, well, then we can follow the orange count, at least consider it, okay? But then there are certain parameters that the price needs to fulfill from a structural point of view, okay? That doesn't mean you have to wait until all 5 waves are filled in to make a trade if you want to trade this scenario. Well, the box is for that, okay? And for example, here the invalidation point, because I mean, if you trade for orange, then the that low must hold. It's just a must. It's black and white, and it is objective. Yeah. And I could make a guess if the low is in or not, but that's not typically how you trade objectively and based on reward and risk parameters. It's just trading based on feelings or trying to call a low, even though it's not callable yet. Okay, we can't. But that's what the box is for. As long as it's turning in the box, I'm happy, because that would mean that we're starting a third wave rally from here, which essentially should initially take the price to $2 plus, but ideally, if it really works out nicely into the $4 range, for the bull run, but there is at the moment no sign that this rally has started. But when it starts, and you know that, it starts from like one moment to the other, and cryptos can rally quickly. So at the moment, the downside pressure is still high, in my opinion, especially as long as we stay below that trend line. A break above the trend line would be an early signal that things might be shifting towards a more bullish interpretation, might then follow the orange count, but that's not very clear yet, okay? That's not very clear yet, and the market would need to give us a little bit more price data for that, because it could easily be white as a triangle, or maybe we are just coming down more directly even, yeah? So downside pressure is still high. I think that's the bottom line, and watch the trend line. That's the next key clue that we might do something more bullish, and then a break above that 52.5 level would be the next key level to watch. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.